sanctions, which are often used to push American foreign policy agendas, don't always achieve their intended results. Despite their purpose, sanctions frequently end up being ineffective because they primarily reflect the preferences of the United States. This means that while they may hurt American economic interests, they often fail to bring about the desired change in the behavior of the targeted country. And over the past few years, America has been using sanctions to restrict and slow the rise of China. And here are a couple of reasons why U.S. sanctions against China don't work. Number 1. China has a robust and huge domestic market. One key reason behind the failure of U.S. sanctions on China is the country's resilient and diverse economy. China has successfully built a robust domestic market and expanded its global economic reach, making it less vulnerable to external pressures. With a GDP of over $16 trillion and a rapidly growing middle class, China has become a significant player in the global economy. While sanctions may disrupt certain sectors or specific companies, China's vast domestic market and strong industrial base allow it to adapt and find alternative markets and partners. When the U.S. restricted Huawei's access to American technology, China invested heavily in domestic chip production, reducing its dependence on U.S. suppliers. As a result, Chinese companies like Huawei and Semiconductor Manufacturing International Corporation, or SMIC, continued to thrive despite U.S. sanctions. Huawei not only survives the U.S. sanctions, but the company is also progressively making a comeback. According to data from the market research company Omdia, the shipment of Huawei's smartphones reached 8.6 million units in the third quarter of 2022, up 48% year-on-year, which is a big reversal of the sales plunge in 2021. Number 2. Global economic interdependence. In today's interconnected world, economies are deeply intertwined, making it challenging to isolate or sanction a specific country without affecting others. The global economic interdependence acts as a shield for China against the impact of U.S. sanctions. China has strategically diversified its trade partners and investment sources, reducing its reliance on the United States. This diversification has enabled China to cushion the impact of U.S. sanctions by forging closer economic ties with other countries, such as those in Europe, Asia, and Africa. China's economic interdependence is exemplified by its Belt and Road Initiative. Through the BRI, China has forged economic partnerships with over 140 countries, including major economies in Europe, Asia, and Africa. This diversification has allowed China to mitigate the impact of U.S. sanctions by increasing trade and investment with other nations. Number 3. China has alternative investment and financing sources. U.S. sanctions on China have also failed to hinder its access to alternative investment and financing sources. China has taken significant steps to establish alternative financial institutions, such as the Asian Infrastructure Investment Bank, AIIB, and the New Development Bank, NDB, as alternatives to the U.S.-dominated International Monetary Fund, IMF, and World Bank. These institutions provide China with a platform to attract foreign investment and offer financial assistance to countries across the globe. The AIIB, founded in 2016, has attracted members from around the world, including Western countries such as the United Kingdom and Germany. This expansion provides China with access to capital and reduces its reliance on traditional Western-dominated financial institutions. Number 4. Technological independence. The tech sector is another area where U.S. sanctions on China have fallen short. While the United States has attempted to restrict Chinese access to key technologies through export controls and sanctions on specific Chinese companies, China has responded by doubling down on its efforts to achieve technological independence. The Made in China 2025 plan and substantial investments in research and development have accelerated China's progress in key industries like artificial intelligence, 5G technology, and semiconductors. This progress reduces China's dependence on U.S. technologies, diminishing the effectiveness of U.S. sanctions in this crucial sector. Despite U.S. efforts to curtail China's 5G expansion through sanctions on Huawei, Chinese companies like Huawei and ZTE have made significant progress in developing and deploying 5G networks worldwide. And last year, the U.S. introduced broader chip restrictions. Certain tools, or chips that are made using American technology, are not allowed to be exported to China. As a result, Japan, South Korea, and the Netherlands were reportedly poised to follow suit. Samsung Electronics and SK Hynix are the two largest manufacturers of memory chips globally. The effect of the China-US chip war has caused companies like Samsung to suffer a revenue drop. Its operating profit was the lowest seen by the company since 2009, at $478.5 million, 95% lower than the previous year. Number 5. Escalation of geopolitical tensions. It is essential to consider the broader geopolitical consequences of U.S. sanctions on China. Sanctions have the potential to escalate tensions and provoke retaliatory measures from the targeted country. In response to U.S. sanctions, China has imposed its countermeasures, such as imposing tariffs on U.S. goods and restricting market access for American companies. This tit-for-tat approach not only undermines the effectiveness of U.S. sanctions but also harms American businesses and farmers who depend on the Chinese market. For example, in response to U.S. tariffs on Chinese goods, China imposed tariffs on American agricultural products, particularly soybeans. This retaliatory action negatively impacted American farmers, as China is one of the largest importers of U.S. soybeans. Apart from that, the U.S. sanctions on many countries like China, Russia, Iran, and more, are giving a clear signal to other countries that they cannot rely solely on the dollar. This has led to many countries looking for ways to trade without using dollars. For instance, early this year, China and Brazil reportedly reached a deal to trade in their currencies, ditching the US dollar as an intermediary. Besides that, 10 ASEAN countries have agreed to increase the use of local currency transactions, a move that could be seen as a continuing shift in de-dollarization in the region. Conclusion: the US sanctions on China don't work effectively. In many cases, the sanctions backfired and disrupted the global market and supply chain. Furthermore, the more the US uses sanctions against other nations, the faster it will lead to de-dollarization as it forces more countries to become self-reliant than depending on the US and the dollar. In conclusion, we are growing into a multipolar world where the US may not be the only superpower in the world. Do you think sanctions are effective? Leave your comments and share your thoughts. If you like this video, hit the like button to show your support. More importantly, subscribe to our channel so that you will continue to receive interesting videos about Asia.